What is going on, everyone? Today we are going to be talking markets. We have Brian with Sentiment here. Brian, can you just kind of introduce yourself and also talk about Sentiment briefly?
Absolutely, Trevor. I'm excited to talk some markets today. So I'm Brian. I'm the head of content here at Santiment. Santiment is the most comprehensive crypto data platform on the internet. We have data on over 2,500 different crypto assets where we go over on-chain, social, and even development activity related metrics to give you guys the insider scoop on what assets are looking to be in a good spot to rise and what assets might be looking to fall or cease their activity, so to speak. So yeah, we've got a lot to offer at Sentiment, and I'm excited to go over the markets with you here, Trevor.
Awesome. Yeah, so my name is Trevor. I am also a video producer for CoinMarketCap, and I also have a smaller channel known as Minted Max. So yeah, I was thinking we could just kind of get into some of the headlines here, and then Brian, if you could just, share your analysis from Sentiment.
100%.
So let's get into it. So first of all, we have one of the biggest articles coming out, which is consumer prices fell 0.1% in December, in line with expectations. Now, I want to show everyone this chart here. Is that this chart shows U.S. inflation every month since 2012. And we can really see here, after 2020, it was typically over 2% since then, and also just increasing up into around June of 2022, and really just getting worse then. Now, since then, in the past about 6 months, we've seen this decrease up until now, where it's at 6.5%. So it's kind of interesting to take a look at here, just see how bad it kind of currently is to where it previously was. Now, whether that's going to change depending on the new meeting that's coming up with Fed Jerome Powell around the 31st, who knows. Other news I wanted to talk about was just this. We have crypto lender Nexo targeted in Bulgaria probe into alleged money laundering and also tax violations. So I believe Nexo seems to be one of the last STFI operators still operating currently, and whether they're still going to be around in the future kind of remains unknown at this point. So we'll see what happens with that. Also, we have some layoff. So crypto brokerage blockchain.com lays off 28% of workforce following Coinbase, which earlier this week slashed around 20% of the workforce. So this is, a lot of tech are still cutting a lot of their workforce. So what's to be seen in the future at this point, who knows. And then also we have short traders suffering $200 million in losses as Ether, Cardano, lead crypto majors gain. So this is also big news. And I think, Brian, you could probably give us a little bit more of an update on your platform, Sentiment, which I've been playing around with recently, and I love it.
Yeah, absolutely. We can jump into the short contracts in just a moment. One thing I wanted to say on the CPI data too, as I share my screen here as well. So on the CPI front, we can see over time exactly how much the traders are actually mentioning CPI, inflation, recession, FOMC meetings. And you can see that with today, not surprisingly, with the CPI data coming out, we've seen our biggest spike over the past month. And if we back out to the last 3 months, we can still see that this is the biggest spike. So people are very interested in what's going on right now. And, that table you showed is very interesting, seeing just how much of a sharp rise there was really starting in the spring of 2022 as, an easing started to come into play for the Fed after essentially 0% interest rates during the initial year and a half or so of COVID here in the US, which allowed corporations to thrive, markets to absolutely flourish without much resistance. And crypto was undoubtedly a beneficiary of the equities markets being able to really pump everywhere we looked. And now that, we've seen these massive inflation rates that are kind of making up for lost time, uh, it's no surprise to see that prices really retraced hard in 2022, and now everyone is wondering if the pattern is going to continue in 2023. And you can see that traders are still very interested, and they're sensitive to the fact that these CPI data reports can have massive impacts on the market. It doesn't necessarily mean that prices are going to go down. You can see that especially on Reddit and Twitter, there's a lot of chatter about it right now. But heading over to the long and short perpetual contract rates, it's very applicable right now. If we looked at this chart a week ago, we would have seen a lot of these green bars for all of these respective assets, which would represent that they are seeing a ton of shorts right now. And typically, if people are betting against the markets, aka shorting, that implies that there can be an increased probability of liquidations of those shorts happening, leading to price rises in the immediate future. But those have essentially happened already, and now we're seeing mostly neutral or long. XRP would be an example of one that's actually still seeing a big long funding rate. Bitcoin Cash still seeing a big long funding rate. And then there's just a few like Tron, like Monero, like Hedera Hashgraph that still see a slight short bias going on, and people are betting on those particular assets to go down, meaning there's a likelier chance of those assets seeing a few more liquidation shorts that can pump up prices. But of course, no guarantees in crypto. So I think it's interesting to see that after this altcoin pump, these first 12-ish days of 2023, it's caused people to dissipate their fears a little bit and start having maybe a very small long bias is what we're seeing now.
So do you think this is any type of relief rally, or do you think this is going to be more sustainable, or what were you thinking?
Yeah, so I mean, according to the very short term, it absolutely looked like it was a relief rally, but that doesn't mean we're done. I think on a monthly basis, there are a lot of positive signs here. We can see that over the past week or so alone, we had several assets that have just absolutely crushed it, with Cardano, Solana, Avalanche here, Lido DAO, Hedera, Aave, Decentraland, and Aptos. Oh, and one more here, Maker. These are all assets that have pumped at least 20% over the past week. However, Bitcoin's sitting over here at just plus 7%, which is not nothing. Being back above 18K for the first time in a couple months is a great sign. Ethereum at plus 11% is a good sign. But it does mean that altcoins are leading the pack above Bitcoin. And typically we see bull runs start with Bitcoin jumping ahead first, and then those profits from Bitcoin start to seep down into altcoins. And that has not been the case here, which means there could have been a bit of an artificial inflation of many market caps without the traditional method of Bitcoin pumping up first. So it does look like altcoins really jumped the gun a little bit, and they could come back down to earth in the next few weeks. Certainly no guarantee of that. We've been surprised many times, and our metrics are more focused on the long term. And when we do look at the long term, I wanted to point this out. We have a glimpse into what the whales and sharks of crypto are doing. This green line here shows what the addresses holding between 10 and 10,000 Bitcoin have been doing over the past 6 months. You can see that they were just dumping from July up until late November. This was about 2 weeks after the FTX implosion. And since then, they've actually started to show a nice accumulation trend. It isn't a massive one by any means, but this downtrend right here in shark and whale holdings for Bitcoin, that had been going on since October of 2021, just prior to the then all-time high that happened in November. And with that dump pattern at least showing some signs of finally ending, it is a sign that Bitcoin can have some recovery. Therefore, the rest of the crypto markets can as well. And altcoins, as we know, still have a lot of making up to do after getting hammered in 2022. And then we can also see that stable coins here, like Tether here in red, USDC here in blue, BUSD in orange, and DAI here in yellow, they're all moving up in the long term, especially over the past 3-4 months or so. And that shows that there's an increased amount of buying power that is popping up on stable coin market caps right now. So I think there are some good signs for a long-term rebound here in 2023. It's just a matter of whether it'll be immediate or not.
Yeah, and then I think it's also going to depend on inflation rates in the future and CPI as well.
100%. Yeah, it's funny being seeing a 6.5% inflation rate year over year, which is normally egregiously high, but for now, compared to the 9% that we were seeing a few months ago, it's actually kind of a cause for celebration. Like, oh, good, the inflation rates are finally coming down a little bit,
Yeah, exactly. That's what I was thinking. It seems like the market is definitely reacting mostly positively to this.
So yeah, I think there is a lot to be optimistic about, to say the least, and we should see a little bit of volatility over the next couple days, depending on when you're watching this video. But I think that the altcoin rally to start the year is certainly something that has turned the markets and the sentiment a bit more positive, and we're just going to see if that lasts. If prices begin to retrace a little bit, let's say over the next week or two, or whether we just start to see tons of shorts once again.
Yeah, definitely.
Yeah.
Awesome. Well, thank you for this video and this collaboration. I think this was awesome to get your analysis.
Yeah.
Thanks a lot.
Yeah, hopefully the first of many, Trevor, and you guys can count on plenty more videos coming up between he and Santiment. So thank you all for checking us out.
Awesome. Sounds good. Thank you guys so much for watching. We'll see you guys in the next one.
Take care.